Hello, and today we are going to be talking about what you need to know about ABLE accounts with Beth Manes from Manes and Weinberg. So please welcome Beth and thank you for being here.
Thanks for having me. My name is Beth Manes. I'm an attorney. My office is in Mountainside, New Jersey, but we practice all over the state. We work with families with special needs kids, everything from special education advocacy, estate planning, special needs planning specifically. And that's what we do. So I'm happy to be here to answer some questions on ABLE accounts. We get them a lot.
Very good. All right. Well, we're going to call it ABLE Account 101. So just what is an ABLE account?
So an ABLE account is a tax-advantaged saving account. It was created under the same legislation as the 529 savings plan for college expenses. So, we say, like in the world of analogies, that ABLE accounts are to disability expenses as 529s are to education expenses.
Okay. And is it something that's available to everybody no matter what age?
It is available to your age. Doesn't matter in terms of establishing the account. You don't need to be at least of a certain age. However, you have to have a disability that began prior to age 26. Although I dropped the footnote that on January 1st, 2026, that age is going to be raised to 46, which opens up a huge segment of the population, which until now or until then won't have been eligible to utilize ABLE accounts.
Okay. So what about the child that receives SSI or SSID? Isn't that enough though?
Probably not. I mean, this is not a terribly rich benefit. I mean, SSI is less than $1,000 a month. And it gets reduced, if somebody earns income, if there's something that's called in-kind support and maintenance. So if you have somebody with a disability who's receiving SSI but living at home, the provision of housing is considered in-kind support and maintenance. So that'll reduce the SSI benefit by a third. So it's probably not enough.
Okay. So as I think about setting this up for my child, kind of scares me because it's always seems so difficult. But is there someone who can help me with it? And how would I reach them to guide me?
Sure. I mean, I'll start with, I swear it's not scary. I've poked around on the website. You can just set it up online. Anything new is daunting, but they're not that difficult for you to manage on your own. Their helpline is very helpful, actually. I've had many clients have their financial advisors help walk them through that, or we'll do it with them in the office. They shouldn't charge for that. They usually, because it's not that long a process. We've helped people do it. So I would say, try it on your own. You can do it. If not, try your financial advisor. Again, your lawyer can probably help you too.
Okay. Well, that makes me feel better. I'm sure I'll make others feel better too. So everything gets all set up. Okay. But what about the amount that I put in? I mean, what are the limits? How much can we do?
Well, not to sound like a lawyer, but it depends. There's no minimum. I mean, each plan will have its own minimum. In New Jersey, you have to put $25 in to start it, but that's it. The maximum depends. So as I said, it's tied to the 529 legislation. So the state in which you open up your ABLE account will determine what the maximum you can have in the account. So New Jersey, we're now at $305,000. However, if you're qualified for SSI, you max out at $100,000. If you have more than $100,000, you will lose your benefits. So although, you might want to shop around for a state that has a higher cap, if you want to put more in, for whatever reason you want to put more in at 529, it makes sense. If you're utilizing the ABLE account as a tool to maintain benefits eligibility, you max out at 100,000 anyway. There's also the cap of how much you can put in annually. You're limited to whatever the gift amount is. So we're still at 17,000. January 1st, it goes up to 18,000. I often get a question about, well, what if I'm earning money? Does that mean I shouldn't work because I can't put in more than 17,000? And we should be encouraging people to work. Everybody wants to work. We want to feel like we're doing something. So there's the Able to Work Act, which increases the amount that you can put in, because what's going into an ABLE account is your own money. So your income is going into this account. So you can put in, as of now, it's up to a little over $30,000 in a year. So you can earn some money, and this is someplace safe to put it where you won't exceed the resource amount and end up disqualified for the benefits you need. Again, I dropped the footnote that that law is scheduled to sunset at the end of 2025. So about 2 years from now, I'm hopeful that it'll be, extended, as many laws are, but just keep that in the back of your mind, that if you're going to be utilizing the Able to Work Act to put more into an ABLE account in any given year, keep an eye on it, because you might lose that ability in about 2 years.
That's very interesting, and I can totally see why each person would have to individualize. Absolutely. So with the money that we put in, can it go for anything that we wish for our child?
No, I know people say, well, anything, you can use it for anything. Again, 529s for education expenses, ABLE accounts for qualified disability expenses. And it's a very broad definition. I'm going to read it to you so I don't get it wrong. A qualified disability expense is any expense related to the account owner's blindness or disability that assists them in increasing and or maintaining their health, independence, and or quality of life. These may include expenses related to education, food, housing, transportation, employment training and support, assistive technology, personal support services, healthcare expenses, financial management and administrative services, and other disability-related expenses that the ABLE account owner might incur as a result of having a disability. What I want to highlight here is that when the includable expenses, that housing is one of them. Earlier I said that if you are provided housing, it reduces your SSI benefit, because SSI is supposed to be used for housing. But if you're paying for housing out of an ABLE account, it doesn't reduce your benefit. So sometimes people will take money, from another resource to put it into the ABLE account to then pay the rent if there's rent being paid.
You're making it very clear and very nice for everybody. And you're also giving us lots of good thinking points too, so that we can make it work for our child. Thank you. So if you're told, that you should have put up a special needs trust for your child, so does that sort of like take the place of an ABLE account in some form? I mean, why would we need both?
A lot of reasons. To start with, there are different types of special needs trusts. There's a third-party special needs trust, which is funded with somebody else's money, third-party money. Parents and inheritance that goes directly into a third-party trust, gifts that go directly into the third-party trust. The self-settled trust is funded with the person with the disability's money, with the beneficiary's money. So, an inheritance that comes to the person, money that's been accumulated in a UTMA account, or just in a regular savings account. Income, child support. Child support is deemed income to the child, even though it's typically being paid to another parent. It's deemed income to the child once that child turns 18. So all of that type of money would go into a self-settled trust. So an ABLE account is similar to a self-settled trust. And the biggest difference between those and a third-party trust is that there's what's called a payback provision. So if there's any money left in these accounts, either the self-settled trust or the ABLE account, when the person dies, the state's first in line, Medicaid's first in line to get paid back for any expenses they've paid on that beneficiary's behalf. So if people want to give money to a beneficiary, that I always say that should go into a third-party trust. Don't ever let it be in that beneficiary's social security number, because then it has to go into the self-settled trust. And then when the beneficiary dies, it's that much less that's going to go back to your other beneficiaries, your other children, grandchildren, whomever. Whereas a third-party trust, you can decide if there's anything left at the end of this beneficiary's life, I want it to go to these other people or charities or whomever. So you do need both. And again, because of the limits in an ABLE account, there's only so much you can put in there. It's not a really great savings tool if you're talking about, moving money from one generation to the next.
And that leads to a question. So what does happen to the money in the account when the individual passes away?
Right. If it's an ABLE account and money has been paid on that beneficiary's behalf, whether it's, through Medicaid, if it's other services that were provided, housing that was provided, there's a lien on that beneficiary's assets. And that's why this works, to protect that beneficiary's resources ahead of time is to say, well, look, but for this tool, you wouldn't qualify for the benefits. So you can have this and you can use it to supplement what we're providing. But at the end of the day, if there's anything left, we get paid back first, says the state.
Okay, thank you for that. And so I am sure that I, like many, are going to have so many more questions as we think about things. So where do I go to get some answers and some help if I need?
Sure. There are some great resources out there. The ABLE National Resource Center, it's ABLE, N as in national, RC.org, has a ton of information. We've got some on our website, Weinberg.com. Social Security Administration has some information on their website. It's out there. Your financial advisors probably have some information. I always recommend a call with the financial advisor and the lawyer so that you can all talk about what the goals are, because, you know, we all stay in our own lane and I know what the greatest legal advice might be, but the financial advisor might have a more creative way of doing things and we can all brainstorm about how to achieve the goals of the family to keep somebody qualified for benefits, but also maximizing what their resources privately can be.
Very nice. Thank you so much for taking
You're so
the
very
time to
welcome.
talk and to help us out with this.
Thanks for
Thank
having
you.
me.